Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
LME 3-month nickel. Okay, so let me just remind you once more, maybe for the last time, well, for quite a while, and also in hindsight, and it's a very timely reminder, I've said here repeatedly in this commentary for about a year now, the most significant feature of this market are the key lows of 2021 at 15,665, which led to the lows of late November 23, plus the lows in 2024, and I suppose also the congestion in 2025. In recent months, this all added up to a test and halt, more or less, at the gold long moving average. It's currently at 15,385. In addition to this, for many months, I also pointed out how the higher 15,840 level, along with the 15,665 level, was and is also still a key level. Please continue to bear these in mind, however high we may venture. Thus, the break higher in Christmas week, up over the gold long moving average, as well as 15,665 and 15,840, saw a significant release of bullish energy that had been pent up for about 2 years. The run up to this move higher was formed from the double bottom built over November and December 2025 and the monthly key reversal up in December last year. These two things ignited the rise we saw that extended into January this year. So what has this move up left us with? Well, we have 3 features to watch out for. The first is now the possible double top formed over January. This pattern depends on one factor: whether or not prices can drop down to the low zone of 16,835 seen 2 weeks ago, and then whether the market can press even lower or not. This is one to watch. The second is to consider if prices try and get down to that 16,835 zone and fail, we might then have to regard the whole December 2025 to date action, or many parts of it therein, as a possible bullish halfway hesitation. There is another thing to watch. Finally, we have the crossover seen 2 weeks ago of the rising green short medium moving average, currently 15,655, the mauve medium moving average, currently 15,490, and the gold long moving average, currently 15,385. This is a bow tie formation, and the moving averages have gone in and exited in the right order, with a bullish tinge about them. Consequently, we need to look to the future, and that means that between 15 to 20 sessions after crossover, we can look to see one or more of the following: a change in trend, a reinforcement of an existing trend, volatility. Thus, please pay special attention to this market between the 29th of January and the 15th of February, as that is the window. LME 3-month zinc. Much like LME aluminium, there had been here a number of patterns affecting the market in recent times, all happening at the same time. The first is the dark blue mid-July to early October last year bull channel, currently 3081 to 3294. This captured most of the action, but was breached a few times, though it remains mostly intact. The second pattern is the bright red May 23 to April 25 bullish Andrews pitchfork, and especially the middle tine overhead, which is currently at 33.16. This was halted last week, along with the dark blue upper bull channel line. The question now is whether this is a temporary halt or the beginning of something larger. At this moment I cannot say, though I would remind you that it is sometimes easier to break up through 2 close together resistances than to work to deal with each of them individually. Now, with that in mind, I do know that the dark blue upper trend line crosses over the bright red middle time around the 9th of February, a not unfamiliar date if you have been listening to my other metals commentaries. Please be aware of this as we move forward. LME 3-month tin. The big picture here had been for some time the dark blue late November 24 to mid-April 25 bullish shift pitch hawk. In mid-December last year, the dark blue upper time was tested and resisted until early January when it finally gave way, adding a gapping move higher in mid-January. The rise was fairly swift until the market breached the previous all-time high seen back in 2022 at 51,000. The day after this happened, the market started to fade, despite an attempt today even up over the old 2022 high. We still have moved back lower. Further overhead we have the bright red upper time currently at 58,080, with the big old pattern dominating these large moves higher, the 2020 to 2022 bullish shift pitch hawk. So what now? Well, I think there are two courses for this market to go. The first is to try and replicate what we have seen in other metals markets. Move up and try and form a possible double top. In this regard, I think this market is a little late when compared to other metals, and I think even possibly too late for such a pattern. But we shall see. The second is to fall back and fill in the gap left in early January below between 45,780 to 46,255, and then decide what to do. Right now, I think that might be the way we might see things, but this can of course change. Then of course, it still leaves us with what will the market do should it drop down and fill in that gap? And that question best left to when we see how and what the market does should it go down to the gap below. There is a third option, but that seems to be a little far-fetched right now, though I think I ought to mention it, and that's to regard the whole 2026 a day action as part of a possible bullish halfway hesitation, in which case the bright red upper time will be tackled and broken. But as I've said already, this is a little far-fetched right now.
Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.